Good morning, traders and investors. Welcome back to the channel. In today's pre-market analysis, we are breaking down the key levels for the Nifty 50 as we head into the trading session. A quick recap. Yesterday, the Nifty had a very quiet, range-bound session, closing almost flat at 25,884.10, up by a negligible 3.35 points. This indicates a state of equilibrium and consolidation, and today's job is to figure out which way this balance will break. The chart I'm looking at gives us a very clear roadmap with defined support and resistance zones. So, let's dive straight into the key levels you need to have on your chart today. Key resistance levels. Starting with the resistances, the market has built a multi-layered wall overhead. The immediate hurdles are R1 at 25,949 and R2 at 26,034. A sustained move above R1 could trigger a move towards R2. However, the most critical resistance to watch today is the R3 level at 26,092. This is a major pivot point. If the index manages to break and hold above R3, it opens the door for a rally towards R4 at 26,150 and even the psychological 26,200 mark. For any strong bullish momentum to be confirmed, the market would need to conquer the higher resistances at R5, 26,208, and R6, 26,266. In summary, the resistance ladder is thick. The battle between the bulls and bears will be fought between 25,950 and 26,100. Key support levels. Now, let's talk about the downside, the supports that need to hold to prevent a deeper correction. The most immediate and critical support is S1 at 25,799. This is just below yesterday's close. If the market slips and breaks below S1, we can expect selling pressure to accelerate. A break below S1 would likely target the next strong support at S2, which is 25,719. If that level fails, the market could slide further towards S3 at 25,619 and the 25,500 zone, where S4 and S5 are located. The key takeaway here is that 25,800, S1, is the line in the sand for the bulls. Holding above it is crucial for any attempt to move higher. Market sentiment or trading strategy. So, what's the overall sentiment? The market is clearly in a consolidation phase after the recent run-up. The flat close and the dense cluster of resistance levels just above suggest the bulls are tired. They need a catalyst to push through. Trading strategy for the day. 1. Bullish scenario. Look for a bounce from the S1, 25,799, level with positive global cues. Your long targets would be R1, 25,949, and then R2, 26,034. The big confirmation comes only above R3, 26,092. Though, bearish scenario, if the index breaks and sustains below S1, 25,799, it's a sign of weakness. You can look for shorts with a target down to S2, 25,719, and then S3, 25,619. Team. Range-bound strategy. Given the tight levels, the market might just oscillate between 25,800 and 26,100. In that case, trade the bounces off support and the rejections from resistance. Risk management is key. Because we are at an inflection point, false breakouts are likely. Always use a stop loss. A quick note on Bank Nifty or conclusion. A quick glance at the bottom of the chart shows, Nifty Bank. While we don't have the full levels, Bank Nifty often leads the Nifty. Keep a close watch on heavyweight banking stocks. If Bank Nifty is weak, it will be very difficult for the Nifty to move higher. To conclude, the Nifty is at a critical juncture. The boundaries are clearly defined. The battle will be fought between 25,800 on the downside and 26,100 on the upside. Watch these levels closely, align them with your technical indicators, and trade what the market gives you. That's all for this pre-market update. I hope this gives you a clear plan for the day. If you found this analysis helpful, please smash that like button, subscribe to the channel, and hit the bell icon so you don't miss our daily updates. Let me know in the comments, are you leaning bullish or bearish for today? What are your key levels?